Hey, this is Sasha. Thanks for joining me in today's video. And today what I want to share with you is some insight to investing with Mark Cuban's strategy that he talked about recently. And I'm going to share with you some thoughts on should you follow it, should you do it, and maybe some pros and cons behind it. So stay tuned. I'm going to answer this question for you right now. All right, so billionaire investor here, Mark Cuban talked about how he's been investing during the coronavirus downward move. So he talked to CNBC here on Wednesday that he's putting 1 to 1.5% to work every single big down day as the fears continue to, take a toll on the stock market. So the big question is should you go ahead and follow this practice? What is this strategy all about, and what's the point of doing it? So here's what's really going on and what's happening when it comes to kind of this strategy. So when you're looking at this thing, this strategy is really all about taking a position on the SPY. That's really what he's focused on. Of course, a couple of other things as well, but looking at it from a diversified perspective, you're looking at SPY, which is very diversified. Now, the thing with SPY is it also gives you a dividend. So as you hold on to this ETF, it also pays out a dividend every single quarter. So now you have a basket of 500 stocks. You don't have to pick specifically which stock. Market that's been continuing to move lower. You got diversification and you got a dividend. And then you also are putting 1 to 1.5% on down days, which means you can add to your position about 100 times. So the question is, are you going to have 100 big down days to be able to add to these positions? And that's what he's betting on, is that within about 100 big down days, things should start to recover, and he's averaging into your position. So that's really what it is simply put, you're averaging down, assuming that eventually things should turn around. And by then, he'll have a nice position built up. And it's not really a bad strategy. Now, here's where things get interesting. And as far as for you goes, is it a good strategy? Because, he's got money. He's got money to spare, and you might not be in that same situation. So the question is number one, do you have money on the sidelines? If you have money on the side, this is one question to ask yourself. Is it something that's worthwhile doing for you? Are you willing to hold for the long term? If you're saying, hey, I'll try this strategy, but I can only survive and hang on to it for a couple months because I need to take that money out, then probably it's not a good situation or setup for you. And then another thing is, if you don't need money for your daily life, because what's happening is you're putting this money in for investment purposes. And it could be another 5 years, 10 years before things turn around. And of course, you're getting dividends on it. So again, if you need money for your daily life, it may not be the best strategy for you and the best setup. But ultimately, overall, it's a wise strategy if you're betting that the market will recover. So how do we implement this with a $20,000 account? Well, every big down day, you can take about $200 and add to your position. That's really about 1 to 1.5%. You're looking at about $200. Now, in our case, when it comes to SPY, unfortunately, the current price is around $230 to $240, which means you may have to put about 2% just to get a single share. So if we go in and kind of take a look at the market here, then what you're really looking at here is the SPY. And if you check out the current stock price, you're right around $234 at the time of recording this video. So if you've got about $20,000 to invest and you're trying to put $200 to work, you really can only buy about a share or two. And even then, you're putting in about 2%. So if you look at the strategy that was implemented, let's say we go ahead and we add maybe 2% here. So we're adding $200, maybe another 200, maybe another 200, maybe another 200. So now you've got 4 segments where you've added a little bit of money. And what you're looking for is that eventually, as you look at this pullback, as we continue this process, you're probably looking, let's just say this trend might continue here, and we don't know if it's going to snap up here or here or here. But let's say we went 1, 2, 3, 4, and we continue this process 5, 6, 7, 8, 9, 10. So understand that you can go ahead and do about 50 to 70 of these positions, and eventually by then you're looking for that to turn around. And if you're looking for this trend to kind of continue on these big down days, well, getting the SPY at about 100 you know, if that continued, let's just take a look at where that is. And again, I've moved some prices around. If you're getting it down at those levels, you know, you're getting way at 2008 kind of lows almost already. So he's betting on that this shouldn't come down all the way down there, but maybe if we do get to about 150 and then this starts to turn around, then you really should be able to capitalize quite nicely. So in either case, that's really the strategy in a nutshell. You're looking to average down, betting on the bigger picture of the market, not necessarily any stock specific, and you're looking to really diversify yourself, because with the SPY, you're basically getting a huge basket of stocks. Not to mention, when you look at the SPY dividend that you're getting paid out, what's happening here is just by holding this, you're also getting about $1.57 in cash for every single share there quarterly. So you're getting a dividend yield of about 1.83%, which is not huge, but it's still quite nice just for holding on for a very diversified trading vehicle. So anyways, I hope this was helpful and insightful. Feel free to check out some of the freebies here that I have on my website. And of course, if you're brand new to the channel, remember to hit subscribe or join the newsletter list right here. Thanks for joining me, and I will see you next time.